They told you it was just a commodity. They told you it was just an industrial input. They told you that if the price ever got too high, the market would simply find more. They lied. As of January 1st, 2026, the global silver market has effectively ceased to be a free market. While the Western world was distracted by the holidays, the People's Republic of China quietly turned the key on a lock that they have been building for a decade. They didn't just change a tariff. They didn't just tweak a tax code. They formally, legally, and physically placed a firewall between the global market and 121 million ounces of physical silver. Welcome to veiled wealth. Today, we are documenting the end of an era. The era of cheap, abundant, available silver is over. The era of resource warfare has begun, and if you are holding paper contracts on Wall Street, you're standing on a trapdoor that just opened. Let's look at the raw data, because the devil is in the details. On the first day of this year, China's Ministry of Commerce implemented a new dual-use export licensing system. This isn't a suggestion, it is law. Every single ounce of silver leaving Chinese ports now requires explicit state approval. We are talking about 4,600 tons of annual exports. That is roughly 147 million ounces of gross weight, or 121 million ounces of pure investment-grade metal. That is 60 to 70% of the refined silver that flows into the global supply chain. Think about the magnitude of that number. The metal that powers the solar industry, the metal that makes electric vehicles work, the metal that runs the servers for artificial intelligence. The majority of it is now behind a bureaucratic wall in Beijing. The mainstream media is trying to spin this. They are calling it administrative tightening. They're telling you it's routine. But here's the critical detail they are bearing. Beijing has released a list of authorized exporters. In a country of 1.4 billion people, in the economy known as the factory of the world, how many companies are allowed to sell silver to the West now? 44. Just 44 entities. And these aren't private companies looking for the best price. These are state-aligned entities. They don't report to shareholders, they report to the party. They have been given a new directive. Keep the metal home. Why? Because China knows what is coming. To understand this move, we have to go back to October, the Xi-Trump meeting. The headlines said it was a constructive dialogue. The United States secured a suspension of some rare earth restrictions. We thought we won. But while we were celebrating that minor victory, China was preparing the counterstrike. They gave us the crumbs and they kept the loaf. They knew that by January 2026, their internal demand for silver, for their massive solar arrays, for their EV dominance, would eclipse their supply. They had a choice: export the silver to keep prices low for Apple and Tesla, or keep the silver to secure their own industrial future. They chose themselves, and in doing so, they have engineered a supply shock that the Western financial system cannot survive. You want proof that this is a crisis? Look at the reaction from Silicon Valley and Austin, Texas. Elon Musk, the CEO of Tesla, a man who usually laughs at supply chain issues, publicly criticized this move on social media immediately after it went into effect. Why is the richest man in the world worried about export licenses in China? Because there is no Tesla without silver. There is no solar roof without silver. There is no Optimus robot without silver. Musk knows the periodic table better than any CEO on Earth. He knows you can't use copper for high-speed AI connectors. It gets too hot. He knows you can't use gold. It's too expensive. Silver is the only element that works. And the country that refines the majority of it just said, we're closing the store. If China restricts exports, Tesla's growth is capped. Microsoft's AI data centers are delayed. The entire green revolution hits a brick wall. This isn't just about prices going up, it's about production lines shutting down. But the corporate panic is nothing compared to the silence coming from the Pentagon. Here at Veiled Wealth, we analyze the intersection of money and power. And right now, American power is vulnerable. Silver is a strategic military asset. It is in the guidance system of every Tomahawk missile. It is in the cockpit of every F-35 fighter jet. It is in the satellites that guide our aircraft carriers. For 30 years, the U.S. defense industrial base has been happy to buy cheap silver from China. We outsourced our refining capacity because it was efficient. Well, efficiency just became a national security threat. If tensions escalate over Taiwan, do you think Beijing will approve those export licenses for Raytheon or Lockheed Martin? Of course not. They will starve our war machine of the very blood it runs on. We have the dollars, but they have the metal. And in a war, you can't shoot dollars at the enemy. So what happens to the market? What happens to the price? This is where the rubber meets the road. For decades, the price of the silver has been determined in two places: the Comex in New York and the LBMA in London. These are paper markets. They trade contracts, not metal. They trade 100 ounces of paper for every single ounce of physical silver in the vault. This fractional reserve scheme works only as long as there is a flow of real metal to backstop the system. If a big buyer stands for delivery, The banks could always fly in metal from China to fill the order. That backstop is gone. With 121 million ounces locked down, the liquidity that greased the gears of the paper scam has evaporated. We are now entering a period of inventory starvation. Watch the spread. Right now, silver in Shanghai is trading at a premium to New York. That gap is going to widen. It's going to scream. Traders will try to buy cheap in New York to sell high in Shanghai, but they won't be able to move the metal. The result? The Comex breaks. When the registered inventory in New York hits critical lows, the exchange will be forced to change the rules. They will move to cash settlement only. They will admit, essentially, that they don't have the silver. That is the moment the price disconnects. The paper price might say $35, but try to buy a physical bar for less than $60. You won't find it. The spot price will become a fiction. The real price will be whatever the person holding the metal says it is. This brings us to you, the individual investor, the stacker. For years, we have warned you about this. We told you that the paper price was a lie. We told you that resource nationalism was inevitable. We told you that eventually the East would stop trading real assets for fake currency. That day has arrived. If you are holding physical silver, do not be shaken by the volatility. The banks are going to fight this. They will dump paper contracts to try and scare you out of your position. They want your ounces. They need your ounces to cover their shorts. Do not give them the satisfaction. You are now holding a strategic asset that the Chinese government considers too valuable to export. You are holding the material that Elon Musk is desperate to secure. You are holding the metal that the Pentagon forgot to stockpile. This is the greatest wealth transfer in history, moving from those who trust the paper promises of the West to those who hold the physical reality of the earth. Let's be clear about what the next 6 months look like. First, denial. The media will ignore this story. The banks will suppress the price. Second, shortage. Industrial users will start reporting delays. Premiums on physical coins and bars will spike, even if the spot price lags. Third, the break. The Shanghai New York spread becomes undeniable. A major default occurs at the Comex or LBMA. The price goes vertical. We are currently in phase 1. The window is closing, but it is not shut yet. January 1st, 2026 was the turning point. The Death Star of market manipulation has been flipped. China isn't suppressing the price anymore. They are cornering the market. The squeeze isn't a theory. It's a geopolitical strategy, and it is happening in real time. This is veiled wealth. We uncover the truth behind the money so you can secure your future. The lock is on. The countdown has started. Protect your wealth, secure your stack, and stay tuned.